So, you've been told a 680 credit score is good. But what does that really get you when you're trying to buy a car or get a mortgage? That small difference between a good score and an excellent one could literally cost you thousands. So, let's cut through the noise. We're going to talk real numbers and see what kind of car, credit card, and house a 680 score gets you in today's world. Let's be honest, the whole credit score system is a bit of a mystery. Lenders use this number to size you up, but the labels they slap on them, fair, good, are pretty much useless. A 680 FICO score is technically good, landing you in the prime category for lenders. It tells them you're a reasonably safe bet. But here's the catch. The good range is huge, stretching all the way from 670 to 739. That 680 puts you on the bottom floor. This creates a massive gray area. When you go to make a big purchase, are you getting a great deal or just a meh one? Let's break it down. First up, let's talk cars. With a 680 credit score, getting approved for a car loan is almost a sure thing. The real question isn't if you'll get a loan, but how much extra you'll pay for it. Based on data from the first quarter of 2025, if you have a score like 680, you're looking at an average interest rate of about 6.7% for a new car and a whopping 9.06% for a used one. Now let's see what someone with a super prime score over 780 gets. They're paying around 5.18% for new and 6.82% for used. What does that look like in your wallet? Let's imagine you're buying a $30,000 used car on a 60-month loan. With that 9.06% rate, your monthly payment is about $624. The person with excellent credit, they're paying around $591 for the exact same car. Over 5 years, that's over $2,000 you paid in extra interest. You got the keys, but you left a pile of cash behind. All right, what about credit cards? This is where a 680 score lands you in a weird middle zone. You'll definitely get approved for some solid, everyday credit cards. Cards like the Capital One Quicksilver one, which gives you a simple 1.5% cash back on everything, are totally within your reach. You can easily find a card with no annual fee and decent rewards. But you're probably not getting into the exclusive club of premium travel rewards. You know, those flashy cards with massive sign-up bonuses, airport lounge access, and travel credits, like the Chase Sapphire Preferred or the Platinum Card from American Express. Those cards are usually looking for scores of 720 or higher. With a 680, you have good options, but you're in the cashback tier, not the luxury travel tier. Now for the big one, your home. This is where your credit score swings the most financial weight. The good news? A 680 score is enough to get you in the door for most types of home loans, including conventional, FHA, and VA loans. For a standard 30-year fixed loan, a borrower with a score in the 680-699 range could expect an average interest rate around 7.06% as of late May 2025. But someone with a score over 760 might snag a rate closer to 6.75%. That might not sound like a huge difference, but on a $350,000 loan, it really stings. The borrower with a 680 score would be paying about $65 more every single month. Over 30 years, that adds up to more than $23,000 in extra interest. And it doesn't stop there. If you have less than a 20% down payment, you'll have to pay private mortgage insurance, or PMI. Your credit score hits you here too. With a 680 score and a small down payment, your PMI could be over 1% of your loan amount each year. On that same $350,000 house with 5% down, that's an extra $290 a month. Meanwhile, a borrower with a score of 760 or higher might pay less than 0.5% for their PMI, saving them hundreds a year. So, what does a 680 credit score actually get you? It gets you access. You can get a car, a credit card, and a mortgage. But it doesn't get you the best deals. You'll consistently pay a little more than someone with a score in the mid-700s, and that difference becomes a huge deal when you're buying a house. Here's the main takeaway. If you're at 680 and thinking about buying a home, putting in the work to boost that score before you apply could save you tens of thousands of dollars. Seriously, the financial leap from 680 to 740 is way more impactful than going from 740 to 800.